Hello, everybody, and welcome back to another weekly chart review. Today, I'm going to be talking about some of my favorite setups and most important setups going into the week, including SPY, QQQ, Microsoft, and Shop. And we're also going to talk about some honorable mentions later in the video. With that being said, let's get right into it. So here we're looking at the SPY weekly chart. A lot of things to be paying attention here as we come into tech earnings season, as well as February FOMC is now on the horizon. After last week, we got a nice retest of the weekly point of control here, a little bit of a downside wick on relatively flat volume. So nothing incredibly notable there besides this retest and hold of the point of control. It's very notable for bulls and also important. If we take a look at some other trends and levels, you can see here that this downtrend being respected multiple times over this bear market is now back into play. We're only trading a few bucks below it, and into this week, this should be very, very important. If we're going to be looking for more upside, we're going to need to see this downtrend break as well as this 398.50 level, which also happens to be SPX 4000. We got a really nice volume gap above. So if the bulls are able to break above this SPX 4000 level, which happens to be very close to that downtrend line here on the weekly, we should anticipate a very rapid move to the upside, considering the lack of liquidity here shown by the volume profile. Also now, as of last week, bulls have used this volume shelf as support, which is very significant as well. And again, right, last week volume was relatively flat. So really into this following week, we're going to be needing to see some volume in either direction. So important to stay mainly unbiased as we continue to trade within this symmetrical triangle. However, it is beginning to look like bulls are gaining an advantage considering they're trading above the weekly high volume node here, including the point of control. And we're trading really close to this downtrend line. So bears are going to need to take a stand in this week at these critical resistance levels and really make a showing to confirm any further downside in the short term. Let's take a look at the daily chart next. All right, on the daily chart, a similar picture can be seen. We have this 395 area, which is that point of control on the weekly, and you can also see this volume shelf still present. We're currently trading back above our prior range lows that we traded within throughout November. And I'm really looking to the two extremes of this volume shelf here, looking for this 398.50 level or this 392 area. So I'm going to be using those level breaks as a trigger to either go long or be more cautious with longs or watch shorts. So essentially really looking for a break over this 398.55 level, which is, or excuse me, 44 level, which is again, SPX 4000, very important psychological level there, and really closely coincides with this weekly downtrend. Now, important to note that we saw some increased volume into the end of the week. We saw that high volume sell down and even equally as high volume buy back up after we set this higher low here. So definitely a nice look so far and going to continue to unpack with some other indicators. Okay, so looking at some indicators, there's really two main things of note that I want to mention into the week. We have the 200 daily moving average here, where we're currently trading essentially right at that level, which is currently sitting at 396. The 200 moving average has been absolutely key throughout this bear market and will continue to act as a key level to watch for sentiment. So as we continue to trade below this, bears are going to have an advantage. If we're able to get above the 200 moving average and hold above, which we have failed to do multiple times in the past, I'm going to be looking at that as a significant change in character in the price action and expect bulls to have an advantage as we trade above this 200 moving average. So again, just to reiterate, a lot of key levels of interest trading directly above price, where we have this 395 area, this 398 area being SPX 4000, and the weekly downtrend and the 200 moving average. A move above all of these levels in unison at some point during the week on increased volume will be a very bullish sign early in the week for me and something I'll be absolutely paying attention to. One other thing I want to note is the advanced decline line, indicating the amount of stocks advancing or declining, has broken this downtrend that it's followed throughout the entire bear market, which could be signaling something to come, a potential downtrend break here in the price action. So something I'm keeping my eyes on, not something to necessarily go full port long in just because of this line breaking out. However, just something to continue to solidify a bullish thesis. Let's move on to checking out QQQ. All right, so QQQ here looking relatively similar to SPY. You can see we have this weekly downtrend still acting as resistance, very similar to SPY. A nice volume gap above the highs around 290, which would contribute to an aggressive move higher if we are able to break higher on some increased volume. Also important to note that we made it above the volume point of control here, this pink line. As of the close last week, we barely squeaked above it, but still notable. One thing that I don't love about this setup, however, is the decreasing volume. We're really going to need to see a push in either direction, whether it's above this trend line or back below this point of control on some increased volume for me to feel any form of conviction in either direction. So I'm going to be watching out for that throughout the next couple of weeks if we don't get a breakout into next week. One important thing to note is we have some form of a double bottom here, definitely some kind of bottom formation where we set these equal lows right around this 260 zone. So very notable there, which is holding so far, but would have liked to see a little bit more volume on this second low that we set around this level. Let's take a look at the daily chart. On the daily chart here, relatively similar look to SPY, where we're retesting this previous support zone that we traded in throughout November. We have previous support, which turned resistance early in the week, which we have now reclaimed above on above average volume. So daily volume looking a lot more convincing than the weekly so far, but going to need to see those larger timeframes contribute to that volume push. Definitely some notable higher lows forming here on the daily chart. We got our initial low here around 250, another low around 260, then 260 and some change, and now another low set at 275. So nice structure forming here. We want to see those higher lows for any form of reversal to begin taking place. Again, similar concept to SPY, that we can't get too biased in either direction, considering we're still sitting below this critical trend line, which has acted as resistance multiple times throughout this bear market. However, it is nice to see a higher low set as we push up into this trend line on increased volume. And we also now should have this nice volume shelf below to act as support. So that's going to do it for our indice look there. And now we're going to get into some individual names. Let's start by looking at Microsoft. So Microsoft here, a little bit to be unpacking. So first, I have the 200 weekly moving average overlaid on the daily chart here. Notice how we double bottomed, or made multiple bottoms here at this 200 weekly moving average. That's definitely very notable, as this level can be really critical for support, and it's very important to see this hold, as selling tends to get very aggressive below if we don't reclaim quickly. So nice to see buyers stepping in here on high volume multiple times in a row. We've began consolidating after that first push higher, broke this small daily downtrend, retested it late in the week and made a nice push higher. We had this gap higher and closed with a nice bull bar near its high on increased volume. Important to note that we have earnings this week on Tuesday, so definitely going to be a little bit of a higher risk trade considering we have that earnings coming up. IV is going to be a bit higher, making options contracts more expensive. I'm not saying this is something that I want to be trading through the earnings. However, definitely an interesting setup going into the report. We're trading really close to this 242 level, which also happens to be the point of control here on the daily. And it's definitely acted as some critical support in the past. I know we've had a few trade ideas based off of this level in specific. It also is this recent swing high, this 242.40 area. So going to be watching a break of this highs to go long with targets at these next swing highs around 245.50, then 248 area, and then up to 250. So those are going to be my targets on an upside break. It's nice to see price holding above this trend with a nice retest, break higher on increased volume. But again, keep in mind, we got earnings on Tuesday. So in no way are we looking to be playing through earnings unless we get some kind of freebie, whether that's calls or puts that we decide to take through earnings, but mainly just looking at the price action before earnings and potentially after as well to trade some of these levels. But really clean setup here for me. I really like this trend break. Nice support here at the weekly 200 and clearing defined trigger level here around 242 and some change. So going to be watching this one early into the week. The next idea that I want to discuss is Shop. All right, so here's Shop on the weekly time frame. Most notable part of this setup to me is this nice base that's been forming and developing over multiple months, ever since May on the weekly here. The one concerning part about this base is we're seeing a serious decline in volume ever since we entered this area, but definitely created a really nice zone of support below us to act as a nice place for buyers to be getting in and support price. So liking this look on the weekly so far. Just want to see some more volume as we hopefully break out of this base to the upside. So daily view here, essentially just looking at this $40 level. If you notice how this $40 has behaved over the past couple months, really, it's acted as a really significant rejection point all throughout this May into July area. And even more recently in September, November, all through these candles, right? And even just recently, just a few days ago, we saw a nice rejection off of 40. But now, again, we're making it back above this level. Again, strong bull bar closing near its highs, not on the increased volume that I'd really like to see for this to be necessarily an A+ setup. However, this $40 level is not one to be reckoned with, and I'm definitely going to be watching this setup over 40 to be going long. I also want to note that this one has been really nice for day trading as well. So I'd be looking at pre-market high as well. So here we have the 15-minute time frame. Just chart out that pre-market high before the market opens and look to be going long above that. especially as we have this bullish trend to provide some confluence here on multiple time frames. Also important to note, if we take a look at the moving averages, which we will do in just a second, all of those are stacked to the upside, which indicates a nice bull trend in the short term. But yeah, really looking for this $40 level to hold as support as we got this breakout late last week. Targets above, first going to be watching out for this previous high, not necessarily a target, it's just a place to be cautious, which is going to be this $41 level. Then it's really looking cleared up to 42.50 and then 45 with an ultimate target at 50, but not something that I plan on holding for within this specific trade idea. So let's take a look at some of those moving averages. All right, so we got the EMAs pulled up here. Notice how we have the 9 EMA in yellow, 21 EMA in blue, and the 50 EMA in red, and how they're all stacked on top of each other with the shortest term EMA above the longest term EMA. That's a nice indication of the short-term trend. If we take a look at when they all crossed to the downside, we had a nice short-term trend to the downside. Well, actually, this was a multi-month trend to the downside that held, but it's nice to see these moving averages gain some distance on top of each other. That's indicating a momentum-fueled trend is beginning. So I want to see this 9 and 21 EMAs continue to act as short-term support and continue this slope upwards, as well as gaining some distance from the 50 EMA. It's a nice indication of momentum in the short term here, and definitely something that I like to keep in mind when paying attention to the trend. With that being said, that wraps up our main trade ideas for the week. I just want to mention a few other stocks that definitely should be paid attention to this week, but going to be a little bit simpler here. So let's take a look at CCL to start. Okay, so looking at the daily chart here on CCL, relatively similar setup to SHOP in this case, where we have a nice base forming and a clearly defined trigger level, which has acted as strong resistance in the past. Really looking at this $11 level to be broken above. Could take an early entry down at this $10 to $10.50 area where we've seen some support, and also have a little bit of a high volume node here on the daily. So looking at this chart, just mainly looking for this break above 11. Seen some nice inflows into the travel sector as a whole recently. I mean, this one in specific is up about 40% off of the recent low. So a really aggressive move so far. Definitely not one to be fully chasing on, but it's nice to see this move cool off a little bit and take a little bit of a breather before hopefully we see a little bit more upside above 11. So that's going to be the main trigger I'm watching there is 11 on CCL. Another similar setup is going to be SQ, a little bit stronger momentum into the close of the week. You'll notice relatively similar looking setup where we have a clearly defined trigger level here at 76. Nice rejection off of it early in the week and quickly reclaimed right back above that level. Also very notable that there's a very solid volume gap above price, which as we know can contribute to a very rapid move higher, considering we don't have too much interest from buyers and sellers at these levels. So again, very similar setup here in SQ, just looking at this trigger level 76 for a move higher up to 81. Another similar setup is going to be ARRY, just trying to provide some diversity in the sectors we're taking a look at. This one's a little bit cleaner here on the weekly, but again, really, really similar concept here. Just a flat base forming, a little bit of an ascending triangle as well into this horizontal resistance level. Pull back into last week, which looks really constructive so far on decreasing volume, and just going to be watching this 24 level to go long above there. And the last setup that we're going to take a look at is Tesla. All right, Tesla here on the weekly, definitely one of everybody's favorite stocks over the past few weeks as it's been trending pretty much every single day and very volatile. Really important to note this incredibly elevated volume over the past few weeks. It's no indication of a bottom in the short term, however, definitely notable to see the interest of potential buyers at these levels, considering we haven't made any significant moves down after this volume has really, really peaked and hit these kind of constant levels. So important to note this, I mean, really almost billion weekly volume. I guess I should correct that, about 900 million weekly volume, but still very, very elevated even for Tesla, especially over the past 2 years. So made it above this weekly trend. Definitely not the most convincing candle considering the amount of volume we had and the relatively small move we made off of that open, but still notable that we're above this trend. Tesla's another one with earnings coming up, so definitely going to contribute to some volatility here in the short term. Really on the daily, just looking at a hold above this 132 level. If we scroll to the left, notice how volume really tapers off here on the shelf. So going to be looking for a really volatile move if we're able to hold above 132 with targets at 141 and then 150 and some change. So those are really the main levels I'll be looking towards. Again, Tesla being the name it is and the current conditions that it's trading in, very, very volatile and easily could just turn into some form of a rising wedge here. If you notice, we got some converging trend lines here on the daily. So important to note that could just be another bear flag forming, not something to throw the whole farm on. However, just a notable setup. Again, fun daily trader, just got to be paying attention to Tesla every day as it always provides opportunities at these levels. So just want to keep in mind. But with that being said, that's going to wrap up our video for today. Hopefully everybody enjoyed and found some value in this one, and can't wait to see everybody in the trade floor and discuss all these plays. So yeah, hope you guys have a great rest of your weekend, enjoy the video, and have a good trading week. Thanks everybody.